Live from the capital of Canada, at least the economic capital, is Jesse Dillon, CEO of Good Life Network.
I'm home, James.
It's been a while, Jesse.
I have been on Bowen Island searching every night for you, and I can't find you.
High and low?
Here you are in Toronto.
I have not been on Bowen Island in 3 years.
It misses you.
I'm sure it does.
There was a beacon somewhere on a hill on Bowen, and on any night you could hear James.
You probably could have back in 2013-12, but yeah, no, I moved here 4 years ago, actually.
You loving it?
No, I pretty much tolerate it. You know, the weather, just one great example. The shootings, the killings, the knifings, the stabbings, the
There's
onies.
a song in there.
There is.
And killings, and knifings, and stabbings. You gotta.
I'm with you.
Dusty Springfield.
Yeah, okay, I was thinking Snoop Dogg.
Snoop Dogg's in.
We see a lot of him lately. He's hurling his ass out all over the canopy space.
I lived here in Toronto for many years.
Did you?
I did a morning radio show here at Q107. Jesse and Jean.
Jesse and Jean in the morning. I listened to it as a child.
Oh, thank you.
Well, I was a child.
I'm not your dad.
No, I felt like a child up until I was about 28.
Yeah.
So that was great.
Congratulations on your success. This is a great show.
Thank you. Tell us about Good Life Networks. Now, this is a company that has evolved so quickly and so forcefully from where I first became aware of it a few years ago that when somebody sent me the deck, I was like, if I hadn't seen your name attached to it, I would have thought, this can't be the same Good Life Networks.
Well, you know, years ago when I did the morning show in Toronto, I would get off the air at 9 o'clock in the morning. There was no one to play with. So I started negotiating deals and building companies and built a few companies, sold a few companies, and taken a couple of companies public. A friend of mine told me that the future of advertising and what I used to do in broadcasting for years was all tied to advertising. A pal told me that the future of advertising was ad tech. We made a pivot with Good Life Networks. We were a different company when you saw us 4 or 5 years ago.
Yep.
We were a digital advertising agency. We pivoted into ad tech in 2016. I bought a technology platform from London, England, very sophisticated, video exchange. We did $2.5 million in 2016, $10 million in 2017. Our trailing Q3 revenues from 2018, James, $40.2 million on $7.7 million EBITDA. We just received Scotiabank financing at prime plus 1.25, and I would suggest we're probably the only microcap company in all of last year that received bank financing at prime plus 1.25.
Yeah, no,
and they do an awful lot of due diligence.
Sure.
They like the story.
So tell me, how do you make money in programmatic advertising?
Well, we're a matchmaker. So there's thousands of companies in digital advertising. It's a big business. There's $750 billion that floats around the planet every year. We're specifically in programmatic. So some genius some years ago took program and automatic and said, let's call it programmatic.
Wow.
You and I would have done better.
That's right. Shorten it up a little, but whatever, this is what we've got.
So instead of being a demand-side platform or a supply-side platform, publishers and advertisers, we're actually the exchange that sits in the middle and connects them. RTB, real-time bidding. You know, so Ford might come into our system and say, I'm looking for men 18 to 49 in the GTA area. We might say we have them here, and it might be ESPN or Fox or TSN. We connect them. We set our margins for the day at 40%. If they meet our margins, we take the bid, shake hands, and as you're opening up your iPad that night to get the scores or the stock report, and there's a little video commercial that plays before your program starts, that's probably us putting the video commercial in front of you.
All this happens automatically?
10 milliseconds.
Computers? Wow.
In 10 milliseconds. Wow. It takes 300 milliseconds to blink your eye.
And I saw that you were projecting 2019 revenue of $67 million?
Yeah, north of 60 million.
North of 60 million.
Correct.
That's a really rapid growth trajectory. So the pivot to programmatic advertising was clearly the right one.
Yes.
Right. Interesting. So who are your clients?
Roku, Google, Verizon.
Big names.
AOL. Yeah.
Wow.
Big
incredible.
Companies.
So who are your competitors?
You know, I would say Acuity Ads is a competitor, but they're more of a demand-side platform. We're the actual exchange that sits in the middle. AppNexus was one of our competitors. They were an exchange. They were doing about 130 million US a year. 2 months ago, AT&T bought them for 1.6 billion. Trade Desk would be one of our competitors. I think their market cap is 7 billion. Their share price has gone up from $74 a share a year ago to $130 a share. They're trading at 85 times EBITDA. based on the strength and the growth of CTV, connected television. We just bought a company in Los Angeles that specializes in connected television. That's a new lane for us to be in. By the way, we're trading at 2 times EBITDA on 40 million Q3 trailing, 7.7 million EBITDA. We're trading at 2 times. Anybody, any mean company in our peer is trading at least 10 times EBITDA. We think we're highly undervalued, and we're starting to get some visibility. Our goal, James, was just to execute, get the numbers up, and eventually the share price would start to respond. Make sense?
Yeah, it makes total sense to me. It strikes me that the market has probably not, because, I mean, you don't hear about this kind of a story every day in the Canadian context. It's usually big ad companies, big technology, all in the U.S. So this is intriguing, and it sounds like the market just hasn't caught up to what the potential possibility might be.
Well, you know, we've been on the road for a couple of conferences. We were at Alpha North in the Bahamas recently, and here at Cantech. And we think we're starting to see some visibility. We're starting to get some research. Yesterday, we had 4.2 million shares trade. We were up 17%, so volumes are picking up. We've actually had, on average, about 500,000 shares trade a day. GMP took us public a year ago. We did just about a $10 million financing.
Okay.
And I think it's taken us, 4 quarters of reporting to finally start seeing some respect, and I think we're starting to notice that.
Sure. What are the catalysts that are going to occur in 2019 to get you over that $60 million revenue?
That $60 million revenue at this point in time, the catalyst for that were the last 2 acquisitions we did. Our own organic growth, which is strong, and 2 very key acquisitions, both from California. Hence, we didn't want to go to the market and do an equity raise. It would have been too dilutive to shareholders and not fair.
Yeah.
So we took bank financing at prime plus 1.25. Great group, Scotiabank.
Yeah.
Those 2 acquisitions will go onto our platform, our proprietary patent pending video exchange. Will ramp their margins much higher than they could on their own. They've been outsourcing and running other people's platforms. Now they have their own GLNs. Those companies are ImpressionX and 495. Their growth and our growth organically will equal 60 million plus. I may, if one floats by our window, and we're looking at a few and have been for a year, another acquisition, we may bring on board a big chunk of revenue from another strategic acquisition.
So that's your growth strategy, growth through acquisition?
Growth through organic growth, which has been strong. Those numbers I gave you before were mostly organic.
Okay.
And then recently acquisitions. Now that we have a certain level of visibility in the marketplace, we're seeing some very good deal flow. And the terms that we acquire as a company, I think you would find attractive.
Yeah.
For instance, would you like to hear one?
Sure.
Okay.
Let's hear it.
Good to see you, man. It's been a long time.
It has.
ImpressionX.
Okay.
It's a connected television company.
Right.
So just to reiterate, people all over the world are buying smart TVs.
Yes.
And unplugging from cable.
I've got one myself in my living room.
They can listen to you as well.
Well, I'm not too comfortable with that.
Everything can listen to you. That's another thing that we don't do, personally identifiable information. The Cambridge Analytica scandal, Facebook just voted one of the most hated companies in North America.
Right.
We don't do PII. Ours, artificial intelligence, doesn't use personal information. The metrics that we acquired ImpressionX by were, they will do 6 to 10 million US min-max this year, ImpressionX, connected TV. We gave them a $4.5 million valuation, a third, and a third. I gave them $500,000 cash. They can earn another $1 million for hitting performance benchmarks over a year. So in essence, we're paying them with their own cash. And they can earn up to $3 million in warrants. They can't be exercised for 2 years for hitting performance benchmarks on a quarterly basis. In any quarter where they don't hit their metrics, they don't get the warrants or the cash.
There's incentive.
and it's relatively non-dilutive.
Yeah.
495 was a bigger acquisition, but the same metrics.
You bet. All right, Jesse, that's a great introduction to the company. The company trades on the TSX, the CSE?
TSXV.
TSXV.
Under the symbol GOOD.
Good. Oh, that's.
And we're in
like
Frankfurt as well.
Okay, cool. We're going to come back to you in the near future and get more on that story. We're going to follow it closely.